Hello, I'm Ataman Özyıldırım, Director for Business Cycles and Growth Research at the Conference Board, and this is your Economics Watch brief for emerging markets for the month of April. Emerging markets maintain their growth momentum for now, and the expectations remain strong. However, 2018 is not likely to see much further strengthening in GDP growth. In China, the leading economic index growth edged down in February after strengthening for 5 straight months. As borrowing costs are rising and liquidity conditions are tightening, investment's contribution to growth in China has declined in recent quarters, and the policy focus is shifting towards reducing the accumulated financial risks. Elsewhere, domestic factors have been supporting growth in emerging markets. For example, investment in other emerging markets such as India, Brazil, Russia, and South Africa keeps supporting growth. External factors add a lot to uncertainty though. Global trade growth has improved lately, but the weaker US dollar has made most emerging markets' currencies expensive, hampering their exports growth. The net effect of the changes in the US trade policies is still hard to predict. There could be both direct and indirect consequences. The direct reliance on exports to the US is high in China and Mexico, but it has declined substantially in China, while it continues to increase in Mexico. India and Brazil export only less than 2% of their GDP to the United States, and hence will see a smaller impact. If the proposed US tariffs on more than $50 billion of imports from China is implemented, there might be significant indirect consequences for Southeast Asia's export sectors, as Asia's electronics and machinery supply chains will be disrupted. I'm Ataman Özyıldırım, and this was your Economics Watch brief for emerging markets.